Hello everyone, welcome to the Accounting 240 video series presentation on determining net income for tax purposes. Now, before watching the video, you might want to read the assigned readings on the subject. Keep in mind that these videos are meant to be supplemental to the reading materials, but they're not meant to be full lectures nor substitute for the reading. So having gotten that out of the way, let's get down to it. Before I attempt the problem, I'm briefly going to summarize the aggregation of net income for tax purposes described in the textbook. Now, recall from your readings that net income for tax purposes is the aggregate of many different types of income, losses, and deductions. Start by adding together all positive non-capital, which means not capital gains, sources of income. This includes any employment income, business income, property income, and any other income the taxpayer earns during the year. Note that we're adding positive values here and not losses. Losses are deducted later in the aggregate formula. Also, it's worth noting that each source of income is included separately. This means that if an individual has, for example, two businesses, one of which is profitable and one of which carries a loss, they cannot be netted against one another, but must be shown in the correct part of the aggregate formula. It might also go without saying, but the total of all these sources in step A must be either positive or zero. Losses can't be created here. Now, once these sources have been added together, the excess of any taxable capital gains over allowable capital losses is also added and subtotaled. Again, in this section, losses cannot be created and the subtotal must be either positive or zero. Now, after subtotaling sections A and B, we now deduct any specific allowable deductions, such as RRSP contributions, spousal support payments, etc. Again, we can't create a loss or negative value here. We may, at most, reduce our subtotal to zero. The last step here involves the subtraction of any non-capital losses, such as employment losses, business losses, or property losses from our subtotal. The results, if positive or zero, is net income for tax purposes. This is for the given taxation year for which we're trying to determine it. It's extremely important to note that losses subtracted in section D can only reduce income for the year to zero. Any excess losses may be carried forward or backward for different tax years, but this is a topic for a later discussion. Another point that I'd really like to stress at this time is that the terminology we use in taxation is very important. We just calculated net income for tax purposes, which is very specifically defined. You're also going to hear the term taxable income throughout the course. This also has a very specific definition which we'll cover later on, but for now, it must be noted that these two terms are absolutely not the same thing. It's not correct to use them interchangeably. If you do so, it's most definitely going to cost you marks. The example that I'll use with you is a simple one, but it should give you an idea as to how to approach similar problems. The exercise asks you to use the aggregate formula we just discussed to determine a taxpayer's net income for tax purposes for the taxation year. This taxpayer has multiple sources of income, some losses, and some specific deductions that we'll use to come up with our final number. We'll start our calculation with step A, adding non-capital sources of income. In this case, Dr. Kananga had employment income for the year and business income, but no other positive sources. So let's add those up. Employment income for the year was $120,000. He also had business income of $21,000 for a step A subtotal of $141,000, which we will carry forward in our calculation. Now we're going to carry forward that step A subtotal and determine the excess, if any, of taxable capital gains over allowable capital losses. In this specific problem, Dr. Kananga had taxable capital gains of $45,000 for the year, but also had allowable capital losses of $68,000 for the year. Now, as the total for this step must be positive or zero, we can see that the excess of gains over losses here is 0. Now, we need to make note that this excess loss can be possibly used in other years, but it cannot be used to offset Step A income that's been determined above. So in this next step, we'll deduct any specific other deductions made during the year from the Step B subtotal. In this example, the taxpayer made contributions to an RRSP, which is deductible from all forms of income. We deduct those contributions from the Step B subtotal, and arrive at our Step C subtotal. In the final step, we're going to deduct any losses incurred during the taxation year from the Step C subtotal. Now in this example, the taxpayer has business and property losses during the year, which are going to be deductible from all forms of income earned thus far. So Dr. Kananga, in addition to his employment income, had a contract business on which he lost $9,500 during the year. He also owned a rental property, which resulted in a $12,500 loss. Totaling the two losses, we have $22,000, which we subtract from our Step C subtotal. This final number is our net income for tax purposes. Again, it's worth noting we cannot create a negative number here. No taxpayer can have negative income for the year. The minimum income anyone can have is 0, and any excess loss would be potentially applicable in other years. Here's an overall summary of what the entire response looks like once it's aggregated. I'd highly recommend sticking to this or a very similar format when attempting problems like this on an exam. It clearly walks through each of the 4 steps sequentially, and it easily demonstrates a strong understanding of the aggregate formula. So here are some hot tips for responding to net income problems. First off, make sure you adhere very closely to the format that I've suggested for you. These questions become more and more complicated as the course progresses. It's a pretty good idea to get the proper formatting down now. Make sure you subtotal at the end of each step. This is going to prevent you from overlapping incorrect components of the formula. Also, remember to put each separate source of income and loss into their proper place in the aggregate formula. Never net out income and losses in Step A or Step D. Make sure your subtotals are never less than 0. Negative subtotals cannot carry through the formula and instead create losses that are used in future years.
Hi, easy, right? Is it? Sure. So the thing for me with these net income for tax purposes problems is that if you've practiced a few of them, the concept is really easy, right? But if you haven't, and then you get later on into the concepts and the higher level topics that we'll be talking about later on, if you kind of drop the ball here, and if you don't necessarily get what net income for tax purposes is, it's going to be a problem later on. So spend the time on the related course pack problems, right? And spend the time on the reading, the understanding, right, of the comprehension of net income for tax purposes and what that is, right? This amalgamation, this piecewise amalgamation of all these individual types of income is really paramount to your understanding tax. There's only so many elements that make up an individual taxpayer's income, right? There's 5 major types of income. Add all those up and you have net income for tax purposes. So again, check out those related course pack problems. And yeah, good luck, guys. I know you can do this one.